Welcome back, traders. Today we're going to talk about something a little bit different. We are going to talk about the Fed Emergency Bank Lending Program ending on March 11th. Now the miners, the miners are looking okay today. It's a small up day, so not much to talk about there. So that's why I'm talking about something else. I mean, we're up 3% on Mara, which in any other stock would be a huge day, but we're talking about Bitcoin miners here. 3% is really not much to talk to, it's not much to talk about. If anything big changes today with the miners or with Bitcoin, I will bring that up later today in a different, I'll make a new video for that. I think this one is actually super important news to look at and understand so last March, there was a lot of bank failures. As a result, the Fed opened up this backstop program with hundreds of billions of dollars that allowed these banks to borrow money and stay solvent during that crash, which is why we didn't have a wider economic crash last March. They're going to let that expire this March, which means they need to act in some way to prevent another bank crash this March. And the Fed only has a few tools in its toolbox that it can use to take action. One of those tools is to lower interest rates. Another one is to either create or destroy cash. Basically, the money supply, raise it or lower it. And those are basically their tools that they're able to use in order to put pressure on things. Uh, so manipulating their balance sheet or manipulating interest rates. And this right here is probably, let's see, let's go into the Fed Watch tool. This news right here is probably going to see this Fed Watch tool for March jump upward in what they're expecting. Let's see, the March 20 meeting. We're expecting target rate 5. Okay, so there's a 50-50 chance. Let's see, this week there is 97% chance we get no change at all to the current rates. So for March, that goes from a 97% chance of things staying the same to a 50-50 flip. In May, it's much more, it's only a 10% chance that we're still where we currently are at the rates here. And the reason I'm bringing that up is because there's a trade here. So if you have interest rates going down, you have treasuries going up. Right here, I've got the 20-year treasury. If we go to max here, this goes all the way back to 2002, mind you. We are at the lows. We are at 20-year lows on the 20-year treasury bond. In fact, was it this month? No, it was October of last year. We went down to $84, which is almost from where this thing opens up at 82.50. So we got almost to the lowest lows possible, or at least historical lows on the 20-year treasury bonds. So basically, when the Fed starts to cut rates, for every percentage point they cut down, so like we're at 5.5% right now, they cut it down to 4.5. That's basically a guaranteed 10% up move on this stock. And since it's so suppressed, that might actually translate to being more like 20% or more, depending on how excited the market gets over that. And then we've all got, and the other stock that I'm looking at here also tracks the 20-year treasury note, but that's the bull, 3 times bullish. So it's a 3x. It does 3 times what TLT does, and that is TMF, ticker symbol TMF. You can see here it is the lowest it has ever been. It's been around since 2009, and this year, since 2022, it's been at the lowest lows ever. It got pushed down through lots of shorts throughout last year, 2022 and last year specifically. We came down to a low of $42. That was before the reverse split. So at one point it was $4.24, and then they did the reverse split so that it was 10 to 1, and that went from 42 to or $4.24 to $42.40. And so right now, what we're looking at is it is sitting on the lows again. And that is because the Fed hasn't cut. They've been expecting the Fed to cut since, mid 2023, and it didn't happen. But with this ending here, that is going to put pressure on the Fed to act. They're going to have to take some kind of action to prevent further losses in the banks because the banks are still unprofitable because of these massive interest rates, which is what caused them to become insolvent in the first place and required the Fed to enact this emergency lending program. So they have to act. They have to take some sort of action because pretty much all of the factors that caused that initial bank failure is still in play. They're still part of the economy right now, and this will cause further bank failures, and the Fed knows that, so they have to take some type of action. They either have to inject money into the economy or they have to cut rates. Unless they've got some other, sneaky thing up their sleeve I'm not aware of, they have to do something. And those are the two somethings they tend to do. They either manipulate money supply or they raise or cut interest rates. And I think since they've had interest rates high for a long time, they've been paused for quite a few months now. The average pause is, about, anywhere between 6 to 12 months. We're in that window, so they probably could safely start cutting now, and that's what I'm expecting. So, anyways, with TMF being a 3 times bull case for the 20-year Treasury bill, if TLT moves 10%, TMF moves 30%. So, if we get a 1% cut from 5.5 to 4.5% on the Fed rate this year, we're going to see a 30% increase in TMF. If we get a 2% cut, we're going to see a 60% increase in TMF likely. That is the likely case. Of course, that's not guaranteed, but I mean, betting against 20-year Treasury bonds is betting against the U.S. government, and I don't know about you, but I wouldn't like to see the U.S. government not fail, mostly because the majority of my livelihood depends on the federal government of the United States continuing to exist and to function properly. So I'm not betting against that. I don't think that they're going to fail, and at some point they will have to cut. So this is in my portfolio. That is just full disclosure. I do have uh, TMF in my portfolio, and I'm patiently waiting for that cut to occur and to see a big increase in the value of my TMF shares. So that's what we're talking about today. That's just a different type of trade that I'm looking at, that I'm involved in right now. Again, this is not a suggestion to buy, sell, or hold any assets whatsoever. This is not financial advice, but that is what I'm doing with my portfolio as we look at this new news coming out from the Fed that they are ending their bank lending program, which will lead to bank failures if they take no action. And I don't think that they're going to take no action unless it's really only really small banks that fail. But we've seen that some pretty big banks are actually in trouble here. Like Schwab's got a lot of these lower cost treasury notes that are cause many of the other banks to go underwater, and they're a huge bank. If they were to fail, that'd be a big problem. And the CME watch tool is saying March we got a coin flip, and of a coin flip in terms of Fed rates being lowered, and that's just what, March 20th. That's just 2 months away. It's probably not going to happen this week. That's highly doubtful. But March 11th, that expiry to the FOMC meeting on the 20th, that's only 9 days. I doubt that we're going to be having the sky falling on us in a matter of 9 days. I mean, weird things happen, but I doubt that's going to happen. So I would get this on my radar. This could still come down lower, especially if the Fed does not cut in March. If they don't cut in March and instead decide to inject cash into the market, we'll see this actually come down because uh, on risk assets will go up. Things like Bitcoin, things like the NASDAQ, those will go up, and this will come down if the Fed chooses to inject cash into the market instead of lowering interest rates. So that is a danger here. Keep that in mind. This is not a guarantee that it's going to go up. In fact, it can go down before it goes up. We could see it come back down to the lows again in the 40s or high 30s, which would be the lowest it has ever been, but it could happen. So keep that in mind. I'm not adding to any of my positions of TMF currently. I'm now waiting for the pivot to really start taking shape. I did front run it a little bit, and I've been up and I've been down on it. Um, but I'm patient, so I can wait for the Fed to, make a decision, and start lowering those rates. I can hold on long enough for that to occur. It's very, very likely to happen this year. So this is a pretty slow move. I mean, we might see returns up to like, probably not 300. I'm looking honestly just for a return up to this 120, 130 range here from the 50. That would be a pretty sweet return for me because my average is like 56 or $57 on this one. That would be a 2x return. That would be fantastic. Uh, Honestly, even we get up to like 80 or 90, I might start trimming my position and taking some profit because you never went broke taking profit, but we have holding on to things too long. And with that said, that is the video for today. It's just an alternative trade that's happening that has news currently that will probably be developing in the next few months. I'd get it on my radar. I'm not, again, not financial advice, not a suggestion to buy, sell, or hold this at all, but put it on a watch list, keep an eye on it, see where it goes, see what the Fed does. Because when the Fed decides to cut these rates, which could start happening in March, some very interesting things are going to happen with TLT, which is the much safer version. This is just straight up 20-year bonds, and TMF, which is the 3x bull case for those 20-year bonds. Keep an eye on them, watch them, because when we start cutting, those are going to get very, very interesting very quickly. Um, Currently, there is a big opportunity that they could still go down because the Fed has few options that it can play around with in terms of, and it can do like it did last time. They could do something sneaky like they did last time, last March, instead of injecting cash directly into the market or lowering rates, they created this new backstop program. And they might have some other thing up their sleeve, some sneaky thing up their sleeve like that. But this particular program is ending March 11th. That is big news. That does have implications for the treasuries. So just wanted to make everyone aware of that as something outside of the Bitcoin miners and outside of just, your regular stocks that is happening right now. That is interesting and will be interesting going forward. So with that said, please like, comment, and subscribe, and have a profitable day.